Hello and welcome to State of the Market with John and Katie from Grizzle Group. I'm Katie, this is my brother John, and today of course the big topic is rising interest rates.
Hello everybody. Yes, interest rates are up about 45% since the end of last year. You'll see on the screen there's a nice graphic that's going to show you sort of what that impact has caused. Essentially, if you're looking for a mortgage payment of around $4,000 a month, at 3%, you can easily qualify over $1 million for a purchase. But as interest rates rise, your affordability drops. So you'll see, if we end up at 5.5%, which could happen, we're pretty close to that already. We're about 75 basis points under that. You're looking at under $800,000 for a purchase. So this is affecting a lot of decision making. So you're either doing two things. You're either deciding, let's lower our price point. Let's look in a different zip code. Or no, I want this house. I want this community. So we're gonna be a little bit more house poor, and make certain financial decisions along those lines. So that's definitely affecting buyers' decision making, and there's a lot of internal conversations going on with all of our clients about what's the best course of action.
Yeah, and unfortunately, rising interest rates has also caused our inventory problem to potentially be a little bit worse. So to put it in perspective, our inventory is about 24% lower when compared with the 3-year average between 2017 and 2019. And with the rising rates, a lot of would-be sellers are deciding to stay in their home because they have a great interest rate from when they bought the last 5 or 6 years or from when they refinanced. And so it doesn't make sense for them to sell and then buy something else at the higher interest rate.
Right. And so demand does look muted right now, but a lot of that is due to the low inventory. You can't buy what's not for sale. And so if you look at, the number of escrows, it seems like it's lower than previous years, but total demand is a much higher number because the impact is more inventory than interest rate right now. So interest rates obviously are starting to come into play. We're seeing a few less offers on every listing, and that's not just us, that's in our office, other agents we talk to, but the norm is still multiple offers over the asking price. Will that shift as interest rates goes up? Probably. It did in 2018, and it would have continued to shift if rates hadn't gone down into 2019. So, we expect that, we're going to start seeing shifts as we move forward. The question is, how long is it going to take to get there? Right now, we're at under 20 days of expected market time. In order for things to be noticeably different in terms of price and terms and just the general activity of the market, we need to be above 60 days. So we have a long way to go. So buckle up. We'll just see what happens here.
Yeah, so what we're doing to have success with our clients is we're having a lot of conversations. So we're sitting down and we're looking at your unique situation and putting together a strategy. Sometimes that means we're just going to wait and see. You continue saving and we'll check back in with you every 30 days. Sometimes that means, no, this makes sense for you to start this journey with us right now, whether you're a seller first or you're a first-time home buyer. But it's all case by case. It starts with a conversation and putting together a plan. So if you're interested in doing something, we'd love to be your agent. We'd love to have that conversation and go from there.
Thanks so much, guys.